This video, I want to consider the financial and ethical benefits of ESG investing, the financial as well as the ethical benefits of environmental, social, and governance investing. ESG investing offers several advantages both for individual investors and the broader market. So here are some key benefits of ESG investing. Number one is enhanced risk management. Enhanced risk management. So this incorporates lower exposure to risk. Lower exposure to risk. So companies with strong ESG practices tend to manage risk better, particularly those related to environmental damage, regulatory fines, social unrest, and governance scandals. So this can result in more stable and reliant and resilient investing. So when it comes to this particular aspect, it is believed that this kind of investing, this strategy tend to lower exposure to risk. Not only that, you have reduced volatility. When it comes to reduced volatility, ESG investing focuses on companies that may experience less volatility because they are often better prepared for regulatory changes, market shifts, and reputational risk. They are better able to manage their reputation, the risk that comes with they losing reputation when it comes to the community they are investing in, or how the public regards the company at large. Number two is long-term performance. Long-term performance, actually, there is sustainable growth when it comes to this strategy. So companies that prioritize ESG factors are more likely to have sustainable business practices, leading to long-term growth and profitability. So studies have shown that ESG investments can perform as well as or better than traditional investments over time. That's what statistics makes us to understand, that ESG investing, the returns involved here at the end of the day is better than that what is obtainable through traditional investing. We have attraction of capital. Attraction of capital by as ESG investing gains popularity, companies with strong ESG credentials are more likely to attract fresh investments. They are more likely to attract keen investors into their horizon, further boosting their performance. So the more investors they attract, the better the performance they are going to obtain at the end of the day. Number three is positive social and environmental impact. Positive social as well as environmental impact. So this has to do with supporting ethical practices. Supporting ethical practices. By investing in companies with strong ESG practices, investors can support businesses that are making a positive impact on society as well as on the environment. These can include reducing carbon emission, improving labor practices, or advancing diversity and inclusion. They may have more of female, in their boards. They may equally include, other races, in their company employment. Not only that, you have an influence on corporate behavior. Influence on corporate behavior. So investors can use their capital to influence companies to adopt better ESG practices, leading to broader positive changes in industries and markets. So those who are fully involved in this kind of investing, they can utilize their huge capital to ignite change that relates to ESG, in line with their investment criteria. And not only that, you have number four, alignment with personal values. Alignment with personal values. That's what ESG is all about. You align your investment with your own personal value. So these incorporates value-driven investing. Value-driven investing. So ESG investing allows investors to align their portfolios with their personal values, whether that means supporting environmental sustainabilities, social justice, or ethical governance, whatever it means to the person, to the individual concerned. So these could go a long way in giving an individual the opportunity and the chance to align, his to align his investments with his personal values. Not only that, you have a kind of peace of mind, knowing that your investments are contributing to positive outcome can provide a sense of fulfillment and peace of mind. It's not just making money, but it should be that sense of fulfillment, and also you should equally have peace of mind when it comes to the kind of companies you are investing in. Not only that, you have a number five, regulatory and market trend. Regulatory and market trend. So under this particular aspect, you have anticipation of future regulations. Anticipation of future regulations. So companies with strong ESG practices are often ahead of the curve when it comes to meeting regulatory requirements, which can protect them from future compliance costs and penalties. They tend to escape penalties because already they are compliant when it comes to regulations. Not only that, you have market preference. Market preference. So as consumers and other stakeholders increasingly prefer sustainable and responsible companies, those with strong ESG practices may have a competitive advantage. Consumers tend to do business with companies that have outstanding ESG scores, so they attract additional level of patronage. Number six is diversification opportunities. Diversification opportunities. This gives access to new markets. So ESG investing opens up opportunities to invest in sectors or companies that may not be part of traditional portfolios, such as renewable energies or social impact ventures. A typical traditional portfolio may not have these companies, within them. But when you talk about ESG investing, you tend to diversify into companies that has to do with renewable energy as well as some social impact ventures. Not only that, you have resilient portfolios. Resilient portfolios, including ESG factors in investing decision, can lead to a more diversified and resilient portfolio, as it encourages a focus on long-term sustainability. That is it. They always emphasize long-term sustainable behavior. Not only that, number seven, improving corporate governance. Improving corporate governance. So under this criteria, you have better decision making. Better decision making. Companies with strong governance practices tend to have better decision making processes, more transparency, and greater accountability, which can lead to more stable and trustworthy investments. Not only that, you have reduced fraud and scandals. Reduce fraud and scandals. So strong governance can reduce the likelihood of corporate scandals, frauds, and ethical lapses, which can severely impact stock prices as well as future investors' returns. please subscribe to this channel and like this video. Number 8, attracting and retaining talents. Attracting and retaining talents. So it has to do with employee satisfaction. So companies that prioritize ESG factors often have better workplace environments, leading to higher employee satisfaction, productivity, and employee retention. So these can contribute to companies' long-term success and stability. Not only that, you have innovation and creativity. Companies with diverse and inclusive workplaces are often more innovative and creative, you know and creative, driving better business outcome, because the company, the employees are retained over time. You discover that they become more creative and more innovative. Number 9 is better stakeholder relationship. Better stakeholder relationship. Customer loyalty is a factor in this regard. So companies with strong ESG credentials may build stronger relationship with customers who are increasingly valuing ethical and sustainable practices. So this can lead to increased brand loyalty and, more importantly, customer retention. Then number 10 is ethical profitability, balanced profits and purpose. When it comes to ESG investing, you profit in an ethical manner. In other words, you balance your profit with your purpose. You balance your returns with your value. You balance your overall investment outcome with your desire to impact the environment positively. So these are important advantages of ESG investing.